How's it going, everybody? Ryan Braswell here with Local Realty, and I am with the great Tom Palmeri. He's going to talk to us about life insurance and give some tips and tricks and ideas, and just have a general chat on how it benefits you and differences in different kinds of policies and things like that. And we'll have some fun questions that might benefit you and your family. So, Tom, why don't you introduce yourself?
Hi, I'm Tom Palmeri. I've been in the insurance business now going on 38 years. I work with a great company called Guardian Life, and the firm I work with is Forest Hills Financial Group, located just a couple of blocks from here, actually.
Okay. And so how did you get into the profession?
Pure luck. I had gone to St. Joe's College. I had a BA in Human Relations, which is a combination of sociology, psychology major with a minor in business, and had no clue what I was going to do after college. And at that time, if you got a job with Grumman was the big industry on Long Island. If you got a job with Grumman, you were going to be set. And I had my resumes out all over the place. And I finally got two interviews one day, and both were for sales positions. And I went into the first one went on, and they show you videos about what you can do and everything. And the second one, I had the fortune of meeting a great gentleman named Bob Mastro-Simone. He became my manager at MetLife. And I just really liked his style. It wasn't anything about other than helping people. And he says, if you help enough people, the income and everything else will follow. Just worry about helping people.
Like Zig Ziglar used to say, right? You help enough people accomplish what they want in life, you'll accomplish everything you want in life.
And I was very blessed with a great manager.
Oh, that's awesome. Yeah, mentors can be, an amazing thing in any industry. Is it true that you can pull value from a life insurance policy while you're alive?
Oh, absolutely. I'll give you a perfect example. And my sister-in-law never minds when I use her as an example. But my sister-in-law is a perfect example of what having cash value or equity, whether it be in a universal life or whole life. I happen to prefer whole life for many, many reasons. But she has a policy, and she's a very successful attorney, and she's bought 4 or 5 buildings by using the values that she's built up in a policy, and she's very smart. She'll take the money out, she'll buy the building, a year or two later, she'll refinance it, pay back the loans in the policy. So guess what? The money's back in there, ready for her to go back at it again. Think of it as having your life insurance as having a home equity loan attached to it.
Okay, so kind of like a HELOC. Or so are there penalties or anything that come along with that? Or
well, you have to do things the right way. And in this particular case, she has every indication to pay the premiums back. So she's taking it out in the form of a loan, and the insurance companies, all of them, will charge you an interest rate. Our current rate with our company is at 6%. But so if somebody takes $10,000 out, it's at a very low cost rate. They don't have to knock on a banker's door and say, hey, what do you think? You think I look good? And do you think I'm qualified for it? No, she calls me up in 3 or 4 days, 5 days. She has the money in her account, and boom, she's going to closing. And so she's a perfect example of how insurance can be taken out. The other thing that we do a lot of is we'll structure a policy that will show you putting cash away now in sequential amounts to a certain date. So you tell me, hey, Tom, I'm going to retire at age 70, and I want to take money out. Well, then, I talked there's a certain way to do it. So you can withdraw in a life insurance policy, which is unique, is you can take out up to your cost basis with a zero tax situation. So if you have enough dividends, let's say you paid $70,000, $80,000, $100,000 in premiums, and you got $100,000 in dividends. You could take that out with zero tax on it and use that to supplement your income in retirement.
That's awesome. That's good. It's good to know the tax benefits and everything of that. That's it must come with a lot of experience and stuff. It's been around the block with it. Now, you mentioned term life, whole life, full. Explain the little differences between those.
Well, there's no one right policy for everyone. And what I mean by that is the very first thing that your financial planner or financial consultant should be doing is taking a snapshot of where you're at, what's important to you in your life, and where you want to be at. And with that in mind, with them knowing what type of income you have, with them knowing what type of expenditures you have, would pretty much dictate what type of policy I would recommend. In the perfect world, I would recommend ownership, right? If I ask somebody, you're a real estate agent, when I ask somebody, would you rather own a home or would you rather rent a home? We know the answer. 9 times out of 10, everybody wants to own their own home. However, there's inherent cost in owning your home compared to just renting, right? I don't have to do the upkeep. I don't have to have down payment to get into a house. So in a term policy is probably for many people that are contemplating whether they should get coverage, the term policy is the cheapest thing.
Okay.
And here's the reason why term policies are cheap. The policy is usually going to expire before you do. So there's a reason why
not ideal.
Not ideal. Well, and again, would you rather buy a 20-year term policy? Consider it like a 20-year lease on a building. Or would you rather maybe try to cough up a little money, get maybe a smaller building, and it's your building?
Okay.
And now you're building up equity. So that's the best analogy that we can put out. But each particular person's situation is different.
So now, like you said, you're basically customizing, every situation in the insurance policies are going to be very specific. What helps you decide which type of policy to get?
Most times, if you think about what the problem is with most people don't have enough immediate emergency funds on the side. So if
I know I don't.
Yeah, well, most of us don't. And I'm a financial professional. You go through a couple of life events, you go through a divorce, you go through putting 4 kids through college. You tell me how your financial plan worked out. Usually what we advise people to do is make sure that you have enough cash flow to take care of immediate expenses. I had a tire blowout when I played golf on Sunday. Well, I didn't want to put it on a card, so I got to take it right out of my bank account. And if I didn't have it in the bank account, I would have hit a credit card. And then I would have hit a credit card at 15, 20, 25%. So that was a real deal on that tire. So in reality, what we try to do is set up an emergency fund first. With that said, that's why we would take the lowest cost term policy initially and get them used to saying, hey, the term policy does a couple of things. It protects your insurability. So as long as you have the ability to convert the contract during the length of the policy, if you're issued a preferred non-smoker, I've seen people's health physically change, as we all do. We all get older, health does change. And so what happens is that while they're first getting started and they're building up their current savings account to take care of that immediate emergencies, you have the term policy, you're paying, it's relatively cheap. Then once all of a sudden you say, hey, I got some money built up, I'm becoming a pretty good saver, I'm becoming a world-class saver here. Then maybe it's a better idea to look at putting some money in a whole life policy.
What are the biggest challenges that most of your clients face, kind of getting started?
I've had certain clients that have started that whole life policy with no reserves. They just said, I like the idea, let's do it. I prefer to have some reserves on the side personally. That's my own opinion. Life insurance is something you have to apply for while you're healthy. And I'll share a very quick story. In August of this year, I've been buying more and more whole life because I have a big term policy that's going to fall off the books in about 5 years. And so I'm in the business. Imagine a shoemaker not being able to pass on a pair of shoes to the kids.
You got to endorse your industry, right?
Exactly.
That's why I own a home.
What happened is I took a medical and I got an immediate response back from my underwriting department and said, hey, abnormal urine reading. We need to take a blood work. I took blood work and they said, abnormal blood reading. See a doctor immediately. And well, long and short, applying for life insurance actually saved my life. And I know it sounds crazy, but my A1C was at 11.1.
Wow.
Now, by the grace of God, I have a great doctor. He went in and he says, you're not on any medications? I said, no, but doc, I feel great. Well, he said, well, that's going to change today. And so I went from being an insurance agent that was an insurable person at a preferred non-smoker rate to now being
right
declined because of diabetes. And so it's something you have to get while you're healthy. And the way I look at it is my policy, when I check out of this earth, which we'll all do at one point, we all as a human race have to face our own mortality.
Father Time is undefeated.
Yep, absolutely. I view my life insurance policy as a statement of love. And it's my last I love you to my kids. And even my ex-wives. I love them enough that, whatever. So each one's getting something.
You want to take care
There'll be
of
a lot of people smiling at the wake. Let's leave it that way.
Hey, that's you want to have a celebration of life at that point. And, if you give people money when you go, I'm sure they're going to celebrate you a little more as well.
Yeah, hallelujah.
Is there a better kind of policy to get into as a 40-year-old?
I'm always going to say it's situationally, right? One of the things I dislike when you see on TV is they have this tendency to say, oh, everybody should do this. No, it's not everybody. Many roads lead to Rome. And in your case, I'd sit down and say to you and your wife who happen to know and say, hey, guys, where are you at? What type of income you have? What are your expenses? What are you looking for? Because you know what? Sometimes if you're looking and you have a dream, that dream can help you get to your goal. And with that said, I would probably say that at 40, it's a perfect time to think about a whole life policy. I've had my whole life policy, and I'm paying a substantial monthly premium on it. I've had it for 6 years, and at this particular point, I'm getting back 3/4 of my paid out premium each month in equity in the policy.
That's amazing.
And I'm 60 years old, so guess what? I'm hoping to live a long time with the grace of God and a few beers. I want to have something that's going to grow each year. So when I'm paying my term policy, that's like an electric bill. Go out to the mailbox, wave that check goodbye, it's never coming back. When I pay my life insurance policy, it's taking money out of my left pocket and putting it into my right pocket. And again, I always go back to asking clients, would you rather own a home or would you rather rent a home? And everybody says, I'd rather own a home. Great. Well, why don't you own your life insurance? Why are we leasing it? Sadly, over the last couple of years, I've had about 35 death claims in the last 3 years. And it's large, and people go, wow, I don't know if I want to be your client. I said,
you just work with a lot of people. That's what it comes down to.
You know, here's the thing. I started when I'm 22, and I just admitted that I'm 60. So if I saw somebody when they were 50, when I was 22, they're 88 years old. So how far do we think people are going to get down the road?
It's inevitability.
And we all hope and wish that we all live happily ever after. But that's what I've seen is that you know, the power of passing on assets. The life insurance is also one of the best assets to pass on to your next generation.
Unfortunately, in just about any industry, there are some sleazy things that happens. What is a big red flag?
Well, there's a couple of things. Number one, I'm a big believer that if you talk badly about your brother, you're talking badly about your family. And what do I mean by that? If I go in and meet with somebody and they bought a policy 10 years ago, some people feel like, hey, this guy maybe misrepresented or they didn't do the right thing for me. I wasn't there at the time. I wasn't there. I didn't know what their facts were. I didn't know what their financials were. And so I think a big red flag for me is if you're going to try to make a sale by bad-mouthing a company or bad-mouthing a rep, that's probably a real bad way of going about it. What clients want to know is not how much you know, but how much you really care about their situation. So if they go on the strength of their company, there's a lot of great companies out there. There's a lot of great reps. I happen to be one of tens of thousands across New York State. You would go for somebody who's going to be part of their professional association. So I'm part of NAIFA, National Association of Insurance and Financial Advisors, as you are part of your realtor.
It's kind of like hiring a realtor, yeah.
You know, you want to go to somebody who has a certain, we have a code of ethics in which we work by.
Love the code of ethics.
Yep, and we have to go by the mindset that we're here. This is one of the sayings that I remember from my manager. He said, forget the commission and remember the mission. We're here to help people, and if you do that enough times, you're going to have a very, very good life. You don't have to worry about walking on the other side of the street when you see somebody coming down. So that's how I tried to hold myself up, and I do believe that you have to be a professional. I would tend to think that if somebody's going to badmouth a company or badmouth another rep,
that's a big red flag. And,
yeah.
And this is, I think this is one of the reasons why we get along, because we're very simpatico with those things. You know, there's many seats, there's many hats, there's many cars come in many different colors. There's wonderful agents at different offices. There's many good companies out there. You have to find somebody who cares about you. And, you know, one thing that I've learned being around you and hitting up the golf course and having a few beers and just, you know, getting to know you is that you truly do care. So tell everybody how they can get in touch with you if they are curious about, you know, having a conversation and seeing what you and Guardian can do.
Sure. The easiest way would probably just to send me an email at Thomas_Palmeri, which is Palmeri at FHFG, which stands for Forest Hills Financial Group.com. Easiest way. I'll give you my cell as well.
Yeah, and all this will be in the links in the description and everything, so that way you can get in touch with them as well.
And my cell phone's on my card. I'm available all the time. Best probably to text me first and say, hey, I'm this person. Ryan recommended me, because I am very busy, and I don't mean to not be able to pick up the call immediately. But that phone number is 917-442-8026.
Awesome. Well, thank you very much for your time, Tom. We really appreciate it.
Thank you, Ron.
You know, hopefully we get you on soon again.
I appreciate it. Thank you very much.
Cheers.